welcome back to another episode of the Lender Podcast. My name is Bryce. Today we've got a special guest, Mr. Tadd Jones. Tadd, welcome to the podcast.
Awesome, I appreciate it, Bryce.
Thanks for being here. So first and foremost, I think I probably say this at the beginning of every podcast, but I fucking love this community. It's so great because Tadd, like, we've never met before, but we met just over Reddit, which I think is so freaking cool. Like the hard money private lending community is just so kick ass because everyone's so willing to like jump on a phone call or help each other out, or hey, if you need, help with loan docs or like sharing deals or whatever it is, it's just, it's so freaking cool. So anyway, I always like seem to preface it like that, but thanks for being here. It's just, it's awesome to be able to chat and network with other people. So,
absolutely.
First and foremost, give the audience a little bit of a background, just where you're calling in from. And I know in our kind of pre-call, we briefly went over your story, but I definitely want to recap that because I think there's a lot of stuff there to unpack.
Yeah, no, absolutely. So I live in Gilbert, Arizona, right outside Phoenix. I've moved around a little bit, but this has always been home for me. And a little preface, before I came to hard money, I worked in the banking and traditional lending space for almost 10 years with a couple of the big banks, with Wells Fargo and Bank of America. Worked my way up through that and was dealing with these investors every day and not being able to help them. Basically walking them out the door because we didn't have products that met their needs. And, knowing banking, it's a very different risk appetite than what we deal with in the investment world. And so I was just handing off deals left and right and not making any money doing it,
Right.
And in the process, really killing a bunch of relationships because I couldn't service these people. And so I had a couple acquaintances back. I was living in Salt Lake at the time, opened Bank of America there in Salt Lake, their retail section. But I had a couple acquaintances back here in Phoenix that were doing hard money and had a smaller fund and said, hey, listen, we know what you're kind of frustrated with. Come help us do our lending here. And so I jumped in with them and helped build up, a couple different small funds that way.
Amazing. Okay. And roughly like how long were you in the mortgage banking, and how long have you been in private lending now?
So on the traditional side, I was doing that for about 4 years, 5 years, maybe. But I mean, the thing is, I ran a bunch of those branches too as in management. So I always had my hand over the years, over those 10 years in the traditional lending side, no matter how you cut it. Right. And now with the hard money side, I've been doing this for, like I said, probably almost 5 years now.
Nice.
Yeah.
Okay. And help like explain to me too, because I'm with you, obviously we're in the hard money space together. So like I see the opportunity in these properties, but for whatever reason, I truly have tried to see it through like the eyes of like a traditional lender. And I don't understand. Like it's just like, maybe it's just ignorance, maybe the lack of knowledge, but it seems like every lender nationwide has the same issue. And, and like I've sat down with like commercial lenders and I'm like, look, man, this is like 50% LTV. Like this deal, you're going to walk in right away with $100,000 in equity, in collateral. This is a no brainer. So what are banks typically afraid of? Is it just the ignorance piece, or what's?
Yeah, I think there's a couple things that go with it. First of all, I mean, you can't ignore 2008, right? And every bank is going to hang their hat on that and say, we're not going to be the bank to make that mistake again. Where we're over leveraging and we're looking at deals a certain way. They shrunk so much in their risk appetite of like, nope, we're going to do this. We're going to be really good at this, but we don't want to put ourselves out on any limb where we could lose money, right? So I think that's part of it. And the other part is just, for traditional lending, it's easy. You see a property, you see the values as is, good. You're good to go. Go put your money out. Well, you switch hats to our world, and everything that we do is you see a diamond in the rough, and this is what it could be.
Right.
But there's a lot of risk in that. not only in does that property perform, but does that investor perform? You're doing a lot of due diligence that you don't necessarily do on the traditional side, and really putting a lot at stake to make sure that these deals actually perform.
And that's a good point too, because like, we've had buyers who have come to us and like quite literally the properties that like we've lent on don't have a roof. Like a traditional bank is not going to touch that with a 10-foot pole. They're like,
100%.
Why on earth would I give you a loan for a house that doesn't have a roof? But you and I will look at that and be like, oh, this is a humongous opportunity. There's a ton of value add. Like this, we'll do this all day long. That's what we specialize in. And another nice thing about being in our world is like, it's not so cookie cutter. It's not cut and dry. Every day's a little bit different. You've got like, you can get creative, which that's what I personally love. I love that hey, like, we can cross collateralize this, or we can do this, and we can, you just like, I like to see it as like a puzzle, and you can kind of put the pieces together and make it work.
Yeah.
Whereas just, like you said, black and white, it's either a yes or a no. And I don't know. To me, that's a big pro in the industry.
No, absolutely. And before I would get deals, and like I said, I'd push them up through 10 different hands to say, will we do this? And it would just come back yes or no. It was never an explanation of why we didn't want to do this. It just doesn't fit the banking box. We don't want it. Right. Whereas in our world now, I'm the same way with you. It's very rare that I ever say no on a deal, just straight no. Because in my head, immediately I'm thinking, well, could we do it this way? Well, what if we did that? What if we brought in another partner? You know what I mean? Like, there's always ways to configure how to do a deal to make it fit your box. And that's what I love about this industry, is just deals will get done. It's just how you want to do them. Yeah,
absolutely. Did you feel like your experience in like the traditional lending space, did any of those customers ever come over, that you had originally turned down? Did that ever open any avenues or anything like that you now work with that you couldn't help them before?
Absolutely. I mean, that was the first call I made to a lot of those guys when I switched over, is I said, hey, listen, you guys do what you do best, right? And there was still guys who are like, I got my HELOC with the bank. I'll use some of my money, whatever, right? But it was like, here's a product that is specifically made for you, and now let's figure out just how to make it work. And absolutely, those are my first calls. And those are the relationships I've held for years, and then I'll keep holding for years. And in that, with some of those guys, even if it doesn't always pan out to, yeah, this is a deal, it's always a contact.
Absolutely.
And the amount of referrals I've gotten off of those guys, because I've just kept them in my book and reached out to them from time to time, like, hey, how's it going? I'm not calling you saying, hey, I need to put money out, I need deals.
Right.
It's just, hey, what's up? How's the family doing? And all of a sudden here comes a conversation, and, oh yeah, my buddy, my brother, whatever is doing this. You should shoot him a call.
Yeah. It's so interesting, because a lot of people are like, oh, well, you've got it like an ulterior motive, like behind the scenes, like you're trying to be salesy, or like, the thing is, no, you're just like being a human being, like we have had people that we've just touched base with 5 years down the road, and then we end up doing something together, and like, whereas before they were like, I don't know, people's lives completely transform over the course of 5 years. And so like, it's just business, it's just like offering solutions and being able to help people out, if they need. It's amazing.
Well, and not to go off on too much of a tangent, you can reel me in anytime, Bryce.
No,
but this exact scenario has happened. I can't even tell you how many times with relationships, because I sponsor a bunch of groups, meetups and whatever. But I had met a guy through one of my meetups. We just hit it off as buddies, right? And all of a sudden we would talk from here, here and there. I got to know him. I got to know his background, his family, everything. But I hadn't done a single deal with him. And so we were sitting down at one of our meetups, and I knew the lender he had been using, and I knew kind of the pros and cons, right? Well, anyways, we're just kind of, shooting the shit a little bit and like, hey, how are things going? His lender sits right down next to him, And I like jokingly, I was like, hey, let me introduce you, because this guy specifically has done your last 10 deals for you, and you guys don't know each other. And he was just like, he grabbed me after the meeting. He's like, you got a point. Like, you know me personally, you know my family. Like, you've taken the time without ever trying to beg for a deal from me. And this guy's, earned thousands of dollars off my back and doesn't know me from Adam.
Yeah.
And it just makes a difference. So
It
I
does.
think to your point of like, there's not that ulterior motive of, hey, I always look at you as a dollar sign.
Right.
I'm looking at you as, hey, I really want to create a relationship with you. And by doing that, now all of a sudden my book of business expands organically. I'm not really chasing it anymore.
Absolutely. I've got a good realtor friend who he he doesn't even really do any like outbound anything anymore, just because like he has built the relationship over the last 10, 15 years that he's been in the business. Like he could quite literally do nothing. Like he could just sit on his thumbs all day and like he would make probably around $500,000 a year just from referral business. It's just like it's an incredible way to do it. It's amazing. So
Absolutely.
okay, I want to switch gears a little bit.
Yeah.
And this is selfishly, but my wife and I we love Arizona. We've got a vacation home in Queen Creek.
Yep.
I love Arizona. So what are some of the specific like challenges? Because you said you're familiar with like the Salt Lake area.
Yep.
What's specific to Arizona that some people maybe in like the lender space should work out or look out for, either from like a legal or a compliance, or either just from like a property perspective? Like maybe you have termites, for example, that other people don't have to deal with, or anything that you can think of. What's Arizona specific?
Yeah. So this market, I call it the Wild West, right? Because every lender wants to be here, but they all want to try and undercut each other and be the cheapest, fastest lender, right? It's just it's the space. And Arizona's, they went through the same thing that a lot of markets did, where everything was booming about 3.5 years ago, and then all of a sudden it hit the flat plateau, and a lot of people are like, "Oh crap, what do I do?" And right at that time, when things flattened out, Arizona got a lot trickier with certain products, and what I mean by that is, forever vacation homes and Airbnbs in Scottsdale, for example,
Yeah,
was the thing. Oh my gosh, no matter what I buy, I'm going to make killer cash flow on this because I can Airbnb it.
for sure.
Sedona, the same thing up north by Flagstaff, right? It became the booming Airbnb place. And really quickly, Scottsdale residents started to say, I hate this. And you're talking about people with a lot of cash in their pocket.
Yeah, Scottsdale's a bougie area. Yeah.
Yes. So when they go to the government and town hall meetings and all that and push back, they're heard. And so at that time, Scottsdale came in and said, we don't like Airbnbs anymore. And for a lot of people, they're like, oh crap, what do I do? Because now, my place that's selling out every weekend with frat boys throwing, huge drinking parties. Well, my multi-million-dollar neighbor is saying, I don't want you here anymore.
Right.
And they made it extremely tough so now new Airbnbs, it's a joke, right? Same thing with Sedona. It got so overran by Airbnb that you go up there. I was just up there last week. You can't hardly even drive through it because there's just so many visitors there now. And it just overtook so much of the properties there. And so they came in and said the same thing, like, we don't want to deal with it. And so as you're looking at different properties, fix and flips, like I said, they plateaued for a while. They're starting to come back up, which is great. But your BRRRR type products and your Airbnbs that you're doing, you just got to be really careful where you're doing it. And you got to do a lot of your own kind of behind the scenes work with it. I picked up a property in Gilbert a couple of years back, and we thought, oh man, this is going to be a killer. It's right by downtown Gilbert. It's always kind of a hit,
hop in spot.
yeah,
Yep.
hop in place. And right before I close, I'm like, let me just do a little bit more due diligence. I hadn't really looked into it too much. I said, let me go read some of the bylaws and stuff that's in here. Well, when I got down to almost the very end of the agreement, nothing short of 30 days on rentals. I'm like, well, I'm screwed now.
Yeah,
I
that
can't
kills
put
it.
that on Airbnb. The only way I can do it is try and find long-term renters, and that was not the whole point of that product, right?
Right.
So, I mean, I was already under contract. I said, I'll just go flip it and make what I make, but it totally changed everything. So that would be my other big thing for Arizona is just do your due diligence with properties here.
Mm. And another thing, so like for those who aren't already aware, they should be, but we're based out of Idaho, and so
Mm-hmm.
pretty much I shouldn't say nowhere, but it's very rare to like enter an area that has HOAs.
Yeah,
Everywhere you turn in Arizona, like there's an
everywhere,
HOA. Like
everywhere.
it is very rare to find a place that doesn't have an HOA, which obviously has its pros and cons. I'm kind of anti HOA, but
Yeah,
just another thing to consider if you are looking to do the Airbnb thing in Arizona.
absolutely. And I've had HOAs kill deals
Yeah.
because not only for pricing, but just being such a headache to work with that by the time my investors finally got through all the HOA hearings and boards, they're like, it's not even worth it now.
Not even worth it anymore. Yeah, we'll just
Yep.
kill the deal. Yeah.
Mm-hmm.
Ooh, that's very good insight. Okay. Let's switch gears and talk a little bit more about Rainy City Capital and kind of what you guys are doing. Um, are you okay like sharing numbers? Like some people want to be kind of vague, other people are like, oh yeah, we've got X million dollars under management. Are you okay
Yeah,
sharing numbers?
I'll keep it somewhat general, right?
Okay.
Like I'll kind of tell you what we're shooting for, what we do. We've talked a little bit off air about kind of where we're at, but I think the big thing with Rain City Capital and the reason I'm here, I came from a couple smaller mom pa type shops for hard money lending, which were great for what they did, but there was also a ceiling on everything, right? Like we did fix and flips, and that's it. Don't call me about anything else, basically. With Rain City, it's your next tier up in terms of hard money where you're still not having to go traditional, but you can do a lot more. A lot of what we do still is fix and flips because that's where we cut our teeth and what we're good at. But we do the 30-year products with DSCR for the rentals. And then we also do ground up construction. Like that's our next baby that we're really pushing on right now because we just see so much of it happening in our different markets. And it's just exciting to be in. So, with some of my other funds that I came from where, we were shooting for, maybe putting out 40 to $50 million in the year, Rain City, our goal, and we're a good chunk of the way there this year is going to be $500 million.
Wow.
So it's a big difference. But with that, it's just when you can open up your portfolio to say, hey, I'm not just a fix and flip lender. I can take on all these other products because people need them. And they don't want to just come to Bryce and say, well, Bryce, you'll do my fix and flips, but then I got to call Tadd to do my DSCRs. And then I got to call Joe to do my, ground up construction.
You're a
If
one-stop
you have a
shop for
one-stop
everything.
shop that'll
Yep.
take care of it all, that's really, where we hang our hat on and say, we're going to make sure we take care of you through every part of the process.
So playing devil's advocate here, let's say I'm a residential home builder,
Mm-hmm.
and I come to you and say, hey, I'd like to do a ground up construction. Why would somebody come to Rain City Capital versus just going to like a credit union and getting a construction loan? Like, what's the difference?
The headache and the red tape again, kind of like we talked about before, right?
Right.
And I'll be fully transparent. If someone is willing to deal with the headache and deal with, you're going to be sending them in tax returns for the last 50 years, it feels like half the time,
Yep.
right? Like you're giving them so much information just to get to that approval point. But if you're willing to do that, a lot of times the banks or credit unions are going to be your best rate. It's just how much of a headache are they going to be? And the other thing that we've started to see, especially over these last couple of years, is so much with the banks and credit unions, they're really tamping down and saying we don't want to take on that many projects at once. So they'll do like a spec ratio, or they'll come in and say, hey, listen, you got 10 builds going at the same time. We're not going to lend you any more money until we see these products start to move. Well, for a builder, that sucks.
Yeah. That puts a damper on your business. Yeah, you can't scale,
absolutely.
You can't grow.
You cannot scale your business if you're constantly being told no. So that's where they come to, kind of this alternative lending to say, hey, listen, help me. I'll still fill in the gaps where I need to with my traditional financing, but I need another partner who's going to say, let's go, let's push it and get products done.
Yeah.
And so that's the difference. And that's where we're seeing, a big push from those guys of saying, man, I'm just getting held back a lot from my traditional lender.
Well, and I think there's something to say too about like it's not always about the rates or the points or anything like that. Like typically speaking, if you come to a private lender, a hard money lender, you might pay a point or two extra on top of what you would pay, with a traditional bank, right?
Yep.
But the thing is that like it's not that easy as just saying like, oh, you're cheaper and you're more expensive, because there are different things that a different lender can see that maybe a traditional banker would not be able to see. Like, look, if they, for example, like we had a project where before we were lending ourselves, we went to our own lender and said, hey, we're doing this project. And he said, hey, well, did you remember this, and this requirement? And I was like, no, I didn't even know that was a thing,
Nope.
And it was some stupid junk fee essentially, but it was like $8,000, but it actually killed the deal. But our lender was the one who brought that up to us. And like the credit union, they didn't give two shits about it. They're like, sure, we'll approve your loan and go for it. And like, I would have been stuck footing that bill for that $8,000 or $10,000, whatever it was. So I think there's more to it than just rates and fees. Like, I think expertise and being able to have someone who's in the business, in the trenches, in the weeds, can completely change things.
No, and it's a conversation I have with people every day. Naturally, everyone wants to call and figure out who's the cheapest lender.
Right.
Within 10 seconds, it's tell me your rates and points. My rebuttal to that every single time is, what are you looking for in a lender? Because I can show you cheaper lenders who are going to do it at higher leverage than me. There's guys all the time that'll do that, right? What you're getting here is, yeah, I might not be the cheapest lender. I will be the best at answering my calls. I will be ahead of it. I have more market expertise than anyone you're going to go talk to. And that all matters. When you're building relationships with people, that matters to be able to say, okay, like this is why I'm costing a little bit more, but I'm in your corner to make sure that this goes the right way.
For sure.
And it just changes the overall conversation and changes the mindset. Because if I come to you, Bryce, and the first question I ask you is, tell me how much you're charging, and you just lay it all out there and say, I'm going to try and get it at the cheapest, all you've created is a guy who's going to jump from you to the next deal.
Yep.
Right? Because the next deal, I promise you, he's going to call back and say, Bryce, we killed that first deal. Make it cheaper this time.
Right.
Right? And then the second you say, this is where I'm at, let me call my other guy. There's no relationship there. They've just looked at who's the cheapest guy, and they're always going to be jumping, product to product. You've got to build a deeper relationship than just that.
Absolutely. And so I've got two thoughts here. The first being, this is a kind of a sales tactic that has like really, really helped me well. But when you're overcoming a sales objection, just like either whether it's pricing or fees or costs or whatever it is, nobody can object to you asking a follow-up question. So what you said, which is brilliant, when someone says, "Hey, what are your rates and fees?" and you completely sidestep the question and you say, "Well, what are you looking for in a lender?"
Yeah.
They can't, there's no rebuttal for that question. And then you can kind of control and steer the conversation. But just like you said, like, oh, hey, we're 3 points and 14%, and we have this fee and an underwriting fee and this. Then just like you said, like, okay, I'm out, done, next, move on to the next guy. But
well, and even if the answer is, because sometimes I'll say, what are you looking for? And naturally it's, well, I want to find the cheapest. Okay, let's dig past that. And I won't let it stop there. You know, okay, now outside of just rates and points, what are you looking for? Because most of the time it comes down to, well, I want to find someone I can build a relationship with. Okay, what does that look like? What do your past relationships look like? Like, what are you seeing in a lender? Why are we sitting on the call right now? You know, and more often than not, after, you know, a 10, 15-minute conversation, I never once hear about rates and points again.
Right.
Because they're like, whatever you're offering me, I'm good with it because we have a relationship now and we understand how to make each other successful.
Yep.
You know,
well,
so
and,
it just
and
changes.
too, if you think about it, like, okay, so let's say that truly the only thing that the borrower cares about is like a difference in 1 point. Like at the end of the day, you're talking about, you know, even on a bigger deal, $500,000, you're talking about what, $5,000.
Yeah.
And the thing is, like, if $5,000 is going to make or break this deal, I don't want to do this deal, period. Like if your margins are that razor thin, like this isn't going to work for either of us. The whole point is to have this be a win-win scenario for both you and I. When you win, I win. And if we're fighting over $5,000, like this is not necessarily a deal that I want to entertain anyway.
No. And another kind of real example, because I just did it over the weekend. I had one of my previous borrowers contacted me. He's doing a $3.5 million home up in Denver. He called me and said, "Hey, you know, can you price this out for me?" He already had a lender in hand that was going to do it at one point. And I told him, no, like this is bigger than our typical box, you know, and I'm going to charge you 2 points. Well, at that high of a deal, me charging an extra points, an extra like $35,000 out of his pocket. But again, based on the relationship, he said, "You'll get it done. I'm never going to question whether you're going to get it done and if you're going to mess around with me," right? So you take that example and you say, you know, a lot of people say, "Oh, who's willing to pay that much more?" Absolutely you are. Because if you don't have the headache and you're not ripping your hair out the entire project, I promise you it's worth it.
Absolutely. Well, and I'm sure this has happened to you because it happens to us almost every single day. But I can't tell you how many times I've had people call and they say, "Look, I went with a Kiavi or this bank or that bank, and we're 46 days into this this contract, and we've extended with the sellers 3 times, and I just don't know if like they're going to come through." I'm like, "Cool, all right, yeah, we'll fund it tomorrow." Like,
Yeah.
no problem. Like, and it's insane to me that people will just lose sleep overnight working with one of these big institutional lenders when all they have to do is just call you up and build the relationship like you're talking about. And like, cool, this is like literally what we do. This is like our bread and butter. I'll fund it tomorrow, no problem. Like title work's in, the contract's there, the numbers look great. Cool, I'll send a wire first thing tomorrow morning.
Absolutely. And here's the funny thing, you know, going from my smaller shops that I worked with where we were putting out quite a bit less, right? Whether you're a $2 million fund or a $200 million fund, you don't do things differently. Because right now, you know, like take your guys' example. You guys are there in Idaho and you're a local, you know, private hard money lender, you know, but you guys have set your credit box, you know, and a lot of your startup money, because I came from this, is friends, family, you know, those type individuals who start your fund for you. Well, you don't want to go sit down at Thanksgiving or Christmas dinner and tell them you lost all their money. You're going to do business a certain way to build up with, you know, a certain risk appetite, and you're focusing on, hey, I want to bring in the right sponsors, the right investors. We don't want to make a mistake, because if you make a mistake at a $2 million fund, you feel it forever and it could sink you.
Absolutely.
Right? if now you push that up to $200 million fund, you might not feel as much on every single individual deal. But if you still have that same mentality of we want to do it with the right people, the right deals, doing it the right way, and still within our credit box, you don't make mistakes, right? And that's where, like, I love kind of where you guys are at right now, because it's the fun part of, like, hey, we're still local, we're still cutting our teeth as we go, but as we want to start getting bigger and pushing out and maybe testing other markets, I'm not going outside of what we've already done. I'm not going to all of a sudden today, throw up a Hail Mary and say, I hope this hits, because it's just not worth it.
Well, and like you said too, like would you do have to show up for Thanksgiving dinner and you got to tell Nana that you lost her, $250,000 like that? That's definitely a little scary. Yeah. So like, and I've said this too, but like I'm way more comfortable losing my own funds than I am somebody else's. Like there's
100%.
times when this is maybe a little bit higher leverage than we should give, or like we almost never ever do seconds, but sure, what the hell, let's kind of a thing. But like you said, when you've got your credit box and Nana's money is on the line and this is what she has to live off of, like you don't do that. You don't gamble with other people's money. Yeah. You don't mess around. So not at all.
See, and I mean, that's the difference as you obviously kind of build up and just strengthen the fund, then all of a sudden you're starting to work with, warehouse financing. You're starting to work with, other bigger bank money now too. So it's a little bit different conversation, but ultimately it's the same thing, right? Like you don't perform, you're going to get a call.
Right.
And it's not Nana's nice call. It's a bunch of headhunters coming your way.
Absolutely. So that's a good follow-up question. I mean, obviously you guys are considerably larger than we are. What's your main source of capital? Are you at like institutional lines of credit? Do you have private investors, all the above? Like what's
all the above?
Okay.
All the above. It's institutional lines. It's, when you get up bigger fund like this, you're talking insurance money, you're talking warehouse lines, you're talking, you've kind of had to shake a lot of hands and kiss a lot of babies to show, right? But I think, again, no matter where you're at in the process, it's all about performance. So if you're not performing at your size, no one's going to want to give you money. That's where every conversation starts and ends as you grow up and go through the institutional money and you start to get into some of these other ones, is show me how long you've done it and show me your track record. And the show me how long, you just got to do it, right? Like there's no way to skirt around that.
Yep.
Right. But show me how you perform. That's every individual loan you're doing right now. So if you're all of a sudden watching your default rate sneak up, or you have non-performing notes, like it hurts, and you go sit down with these guys and you say, hey, listen, I want, a $50 million line of credit to, really scale my business. They're going to say, show me your books, and if you have stuff that's not performing, they're going to call you out on it. Like,
absolutely.
There's no getting around that. So, that's where we're at, is we've done a lot of the show me part of it. My owner, he was a fix and flipper himself up in Seattle, and he started lending back in 2009, started Rain City in 2009, and just did it the right way, worked his way up. And I mean, now we're sitting 15 years later and doing that much. But what I would say is, my big thing is success doesn't happen overnight. It really doesn't. And even in the lending world, like, you got to just take the right steps and build it the right way. And then it becomes a juggernaut. And all of a sudden you're like, dude, we can't be stopped at this point.
Absolutely. Yeah. You're moving down the track so fast. There's nothing that can stop you. Yeah. Wow. Okay. So again, selfishly for me, I mean, these tips are gold, but if you were in my shoes, we're sitting right around 2.5 million or so for our overall fund. What would be the best, biggest advice that you can give to me as just someone who's trying to, push towards that $10 million mark?
Yeah, I mean, I should ask, are you still in like the raising private money? Are you guys good with where you're at? Like, kind of where do you guys stand as of today?
Yeah, so our biggest constraints right now are capital. Like we've got
Sure.
more loan volume than we can handle, but
Yep.
all of our capital is either like my own personal funds that we use to liquidate from like our rentals and everything like that.
Yep.
And then we do have probably a dozen investors as well, just private
Mm-hmm.
investors. So we have no institutional lines, no bank lines, no anything like that. It's just all
Which is great. Yeah.
private funds. Yeah.
Right. Like there, it's the catch-22 with private money. That's where
Mm,
I came from. Is we had built so much off of private money, and I loved it. We didn't have anyone really to answer to besides our individual investors to say, "Hey, let's make sure you're getting your return that we had promised you." Right. But it was like I said, the catch-22 of it is it's really easy to run out of cash, right? And so all of a sudden you're sitting there and saying, "Man, this is great. We're killing it, but if I don't have money, I don't have money."
right.
And that was, one of the smaller lenders. That's why I ultimately ended up leaving. Was I loved it. We were a family there. Everything was great, but we put out so much cash. We had such a long line waiting for people to come use our money that all of a sudden I started getting calls and I'm turning people away left and right. And the second you tell someone no, it's okay. I'm
I'll
going
go
to go
somewhere
call the
else.
next guy,
Yep.
right? And so, but what I would say to you guys is my biggest thing, as I help those other funds kind of build up and get to a certain level, is don't lose who you are. You guys have your own way of doing things. You have, kind of your mottos, whatever it might be, of, hey, this is who we want to be in this space. Don't lose that. Because whether you're
Mm,
at 2 million or 20 million, like you guys want to be a certain person, a certain company, and put yourselves out in a certain way, right? With Range City, our motto is really build lasting relationships with our clients. I'll do whatever I can for my investors, but I want to do it the right way, and I want to do it the right way from the start. It's the same thing for you guys. Is as you build up and you're making those relationships, be very strategic who you do business with.
mm,
You wouldn't let anyone in your fund right now as a private investor that you're not 100% okay with,
right.
right? Well, it's the same thing as you go up through institutional money, and who you start to kind of rub elbows with is who fits what we do. Of
Not the other
course,
way
I want to go
around.
get more money and more lines to put out more
Right.
business. But if all of a sudden I'm losing my voice in the transaction, do I want to be doing business that way? So
Mm,
that would just be my bit of advice is, be very selective of who you take money from. At the
mm,
end of the day, there's going to be guys with money no matter what.
right.
But you got to be very selective who you do that with.
Mm. And that's such a good point because that can really dictate how your business is run too. For example, if you have investors who are just a pain in the ass and they're calling you
Yep.
every single day and they're saying, "Where's this at?" and what's like, I'll let those people go. I'm like, look,
Yeah.
if you don't trust me, like, I'm sorry, this isn't going to work because this relationship, unfortunately, is 100% trust.
Yeah.
And like, it's not worth my headache and my peace of mind to constantly, and like I say that there's obviously a fine line, right? Like you want to keep your investors informed and in the loop and they know where
Yeah.
everything's at. But like, it's a give and take. I'm not going to update you every single day, every half hour on what's going on because I've got other things that I got to do too. But
Yeah.
like keep in mind that like your funds are in my best interest and your best interest. Like it's front of mind.
Yeah.
We're focused on it and we're actively trying to not lose your funds.
Yep.
And so, it's easier said than done, but yeah, we've had investors who are like, you know what, let me let me go ahead and send you your funds back. It doesn't seem like this is
Yeah,
working
it's not a
out.
good
It's not a
fit.
good fit. And that's okay. Like
Yeah.
you don't jive with anyone and everyone, but it's just not working for us. So, maybe you search elsewhere.
Well, and it's the same mentality that I have with borrowers too, right? Is if on our initial call, it's already so tedious to just get through a conversation, I haven't even lent you hundreds of thousands of dollars yet, and you're already a pain, right? I've told people right there on the spot, hey, listen, you seem like a good person. We just don't seem like a good fit. Go, knock out a few deals, figure out what you want, and then maybe we have a conversation down the road. But as of right now, it's just not going to work. And if I take on that headache, now I'm putting that headache on my team. I'm putting on my processing team, and that's a headache on our fund. Like, you got to think of it all the way through the process. And so, to your point with investors, we've done the same thing. We've had people where we're literally just said, not worth it. Like, I love you. I appreciate you letting us try and, help you make some money here. It's just, I cannot babysit you all the time.
Right.
And so that's why I say, I think with borrowers and investors, it comes kind of full circle because it's very similar.
Yeah. Well, what would you say? Because obviously, like, investor relations is a huge, like, there's a huge aspect of that in lending. Obviously, you're borrowing people's money. They want to keep informed. They want to know, what's going on there. When you get to your size, how do you handle that and juggle it in the sense so that, like, it's not a pain to deal with all day long, but also people don't feel like they're just, like, cast to the shadows and don't know what's going on? Like, how do you balance all that?
Luckily, at a fund this size, I don't have to be the one taking those calls, right? I'll let my owner and the principals kind of take those calls. But ultimately, I think, again, it's just, there is a level of transparency, right? You need to be fully transparent with people, especially when people are putting in, their full life savings and retirement. Like, there is a lot of trust that goes into that initial conversation. And it doesn't matter what fund size you are, it's the same conversation of, we're here. You already kind of hit on it. We got a lot of our own money into this. So if this doesn't work, I'm screwed.
Yeah.
Like I'll be the first one to take that on the nose and say, I lost my money before I'm going to let anyone else lose their money in that process.
Right.
And that's where so many times those conversations, it's like, oh, okay. Like, you're not just looking out for your own self-interest. Like, my money sits at the front of that conversation. And if things start to take a downward turn, you better believe I'm going to call you and say, hey, this is what it's looking like.
Absolutely. Oh, that's gold. Oh, Tadd, thank you. So I want to be very respectful of your time because I know everyone's busy, but this has been awesome. I again, one of the reasons I love these podcasts is because I can selfishly ask all the questions that I'm actively running against every day as I'm, like, in the weeds, and so it's good to network and pick the brains of veterans who know what they're doing. So
no, I appreciate the time. And I would say, one last thing is, you kind of mentioned it earlier, gain relationships with other lenders. It sounds counterproductive. It really does.
Right.
When
Everyone's
I first
like, no, this is my silo. Like, you back off. Yeah.
When I first came in, I felt like I was like, oh man, this is going to be super territorial. I'm going to draw my line in the sand. This is why you come with me, and this is why I hate that guy. Really quickly, I realized in this industry, not at all.
That's not it.
That's not it, because what you can do, for example, I don't lend in Idaho. So if I have a borrower that says, hey, I want to do Idaho, I know Bryce.
Right.
Go talk to Bryce. I've talked to Bryce face to face for an hour, right? Same thing, you come to any of our markets, we're across, a ton of different states now, but you come and you say, who does that? Who's in those markets? Oh, cool. This person works there. It makes a big difference. And that's what I tell, any borrower, but any lender, is just gain relationships, have people that you can call. If something doesn't fit your buy box or credit box, whatever it might be, there's someone out there that it does. And have those guys that you can call to make sure that your clients aren't just getting shafted.
Yeah.
So
such good advice. I love it. I love it. Tadd, let's say somebody wants to get a hold of you who's listening. What's the best way to either cell phone or email or socials, or go ahead and pitch your stuff? How do we get a hold?
I'm on my cell phone way too much. You can ask my wife. she says that I'm never not on it, but that's honestly the easiest way. Shoot me a call or a text anytime. My number is 480-244-4698. And then if you have a specific thing, or some people just don't feel comfortable talking on the phone. I get it. You can easily shoot me an email. It's my first name, so Tadd, TADD, and then the letter J for Jones at raincitycapital.com.
I don't know why anybody would be afraid to call you up, because you've got such like a calm aura about you. You're very, very easy, and it's just great talking to you. But yeah, like I said, if anybody wants to get a hold of Tadd, for sure, he's a wealth of information, and I'll be sure to. I'm going to be doing the same, so you might have to block me after too long, because I've got.
No, that's awesome.
I've got
I
questions.
appreciate it, Bryce.
So, for everybody else listening, thanks for sticking around. Tadd, thanks again for being on the podcast. Absolutely. And we'll catch you next week on next week's episode.
Awesome. Thanks, Bryce.
See ya.